Okay, now I've added a new item right here. And I put it on the instructions line, but think of it as another item in this table. Now, after we work through the entire formula that you see on the screen now, I'll explain how we would calculate the $91,360. 91,360 is a credit, and then show the 91,360 on the memo side, the pension side of the equation. I didn't mean to move the screen there. And now we're in balance, right? We've got one credit and one debit, so to speak. All right. Then we look at item K, which is amortization of PSC. Well, that's the prior service cost. And that's the $90,000. Well, we need to show that, and we show that as an increase in our expense of that $90,000. And then that shows up as a credit, right, under unrecognized prior service cost on the pension side. All right, the second year funding of the contributions, last year was 140, is now 185. So we would decrease cash by $185,000, and that then increases the assets because we're paying the pension fund, the 185, right? That's our expense. Oop, I need to make that a minus so that it comes up the opposite side, 185,000. Okay. And then we move on to line M, which is the benefits. And the benefits paid is $280,000. So that's going to reduce our projected benefits. So we show that as a positive number or a debit, right? And the fact that it was paid then means it came out of the pension plan. And that's $280,000 shows up as a credit. Okay. So then if we sum this sum from above, we're able to come up with the journal entry or the spreadsheet that will help us make the journal entry. And we get $425,640 as a debit. That's correct. The 185 makes sense. Do we miss anything on the 178 side? Oh yes, remember how we did this before. This is simply the difference. So we will we'll take and just copy that formula to come up with $246,640, which essentially means we had pension expense of $425,640. We actually paid out cash of $185, so we need to make some kind of adjustment to show an accrued pension cost or a prepaid amount. In this case, it's a greater liability, so it is an accrued amount of $240,000. Okay, then once we do that, we can figure out what our balance is in total. And we would start from the beginning balance and sum down to the new one, 418. Now this one, the formula, we already had a subtotal in there, so we'll sum from the 5070,000, that's in cell F37, all the way down, and we come up with 5477 is our new projected benefit obligation. And I think if we sum here, we're in good shape. Nope. I need to bring in the beginning amount. So we sum from all the way to there to come up with the plan assets of $4,557,000. We now have $410,000 of unrecognized prior service costs since we've amortized $90,000 of it, right? And that unusual gain shows up as $91,360. And that's what's required. Now let's just go through a quick reconciliation, and I'm going to adjust the screen to do that. Okay, before we work on that reconciliation, I want to point out that even though I've given you in this demo the 91,360 of the unexpected loss, we actually could calculate that. In 2009, the plan assets were $4,392,000. And we were expecting a rate of return of 8%. So if we take, and I'm just going to type it out here, but if we take that 4392 times the 8%, we would come up with some dollar amount. And let me calculate that just off to the side so we can do it. where's a good cell to do it, right? And I'm trying to find one that isn't here. Why don't we do it here? Equal 4392 times 8%. We get 351,360. But our actual return was 260,000, right? I'll put that right there. So if I slide one more up here, and we take what we projected minus what the actual return was, we've calculated that 91,360. Get this done so you can see the numbers here. Okay, now that's just my quick calculation again of taking the plan assets times 8% and then backing out what the actual return was, which was given above, 260,000. I'll slide back down. All right, now that we've done that, let's work on this reconciliation. The projected benefit obligation as of 12/31/09 was equal to 5477 million, and that comes from right there. And let's do all. That's fine. Now take the fair value of the plan assets at that point, and that's equal to 4577. So the funding status, we sum from above. Looks like we're underfunded 920,000. The unrecognized prior service is equal to 410,000. And the unrecognized net gain or loss, right? And it's unrecognized at this point. It's really just the difference of what we expected and what we actually resulted. Should be able to compute our accrued pension liability. So if we sum all of those, we're able to force 418,640, which is that amount right there. And that's how this spreadsheet all comes together. Okay, thanks everyone.